Ladies and gentlemen, good day and welcome to the BCL Industries Limited fourth quarter and FY23 results conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Vilas Suryavanshi from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Zico. Good morning and very warm welcome to everyone. Thank you for being on a call of BCL Industries Limited. We are happy to have management of BCL with us here today for question and answer session with investment community. Management is represented by Mr. Kushal Mittal, Joint Managing Director. Before we start with the question and answer session, we will have opening comments from the management. Over to you, Kushal.
Thank you for the introduction. And also thank you to PhillipCapital for hosting our earnings call. Good morning, everyone. We would like to extend a warm welcome to the earnings call for the fourth quarter and financial year ended 2023. Let me start by giving you the key financial highlights for the fourth quarter. Total income for the quarter was around 458 crores, including Swaksha, which is a decline of 10% on year-on-year basis. EBITDA for the quarter was 48 crores, which increased by 16% year-on-year basis. EBITDA margin stood at 10.47%. The net profit was around 25 crores, which is an increase of 7.4% year-on-year basis. PAT margin stood at 5.37%. It is important to note that the revenue contribution from Swaksha for the quarter was at 74 crores and EBITDA was at 9 crores, which is an improvement from the previous quarters. For the financial year ended 23, the total income stood at 1827 crores, which is a decline of 8.7% year-on-year. EBITDA stood at 130 crores, a decline of 10.6% year-on-year, and margins were at 7.13%. PAT was about 64 crores, while PAT margins were at 3.5%. For Swaksha Distillery, the total income for the financial year was at 187 crores with an EBITDA of 11 crores. Coming to the operational highlights, I would like to start with the distillery segment. BCL Distillery Unit at Bathinda continues to operate at 100% capacity utilization with good demand for both ENA and ethanol. And the company also hopes to commission the 200 KLPD expansion of ethanol by the end of June 2023. This should have a positive impact on the company's financials moving forward. To combat inflation in fuel prices, the company has commissioned its paddy straw-based 11 megawatt power plant in Bathinda in the second half of May 2023. The company expects this power plant to bring down the fuel costs for the distillery segment significantly moving forward. For ENA market, March and April months are considered to be lean months as the new excise policy renewed during this period. This has led to a lower demand for ENA in West Bengal, and the company expects its sales from West Bengal plant under its subsidiary, Swaksha Distillery Unit, to be good moving forward. The expansion plans for the additional 100 KLPD are ongoing. The company expects to commission this plant by December 2023 with a project cost of around 90 crores. There has been a significant increase in EBITDA margin for the 2022-23 in the distillery segment, and this has happened due to very good demand for ENA and the company's strong inventory management during a period of fuel price inflation. In the edible oil segment, there was a dip in revenue for the quarter, which was due to the drop in global edible oil prices globally, dip in revenues, the company was able to get 4.5% in EBITDA margin from this sector due to strong inventory management. Global edible oil prices have decreased at about 30 to 40% when compared to the previous year, while the company's revenue from edible oils have only decreased by 26.5%. This indicates that the company has not decreased its volume being processed from this sector. The edible oil prices continue to be in decline as I speak, and we are waiting to see how this market stabilizes. Lastly, in the real estate segment, in its attempt to reduce the financial burden of the company, BCL has continued to utilize revenues from the real estate to liquidate its debt, which is visible in the year-on-year results. With that said, I would now like to open the floor up for any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Mayur Liam from Profit Mart Securities. Please go ahead.
Thank you for the opportunity. I just want to ask right now, how much distillery do we have, and how much capital utilization per distillery for the Q4 and the full year? If you provide the number distillery wise, it would be very helpful, sir.
In Bathinda, we currently have 200 KLPD of ENA and ethanol, and for the entire year, last year, the capacity utilization was at 100%. In Kharagpur, we have, in Bengal, we have 200 KLPD in ethanol and ENA again, and this plant was commissioned in July of 2022, but there were some problems that we ran into. So I think since then the capacity utilization has been at around 70% for that unit. But now moving forward, we hope for that capacity utilization to be 100%. And in next month, we expect to commission another 200 KLPD of ethanol only at Bathinda. And we once the plant is fully commissioned, we expect the capacity utilization to remain at 100% for that expansion as well. And another 100 KLPD of ethanol is to be added at Swaksha before the calendar year ends.
Okay. Sir, and my last question, how do you see the financial year 2024? What is your expectation from the next year and the outlook for the next year? If you provide the guidance on the segment wise, it would be helpful for me.
For edible oil segment, we are hopeful of a stable year, but I can't speak with too much certainty in this sector as of now, because the market is at a free fall as we speak, and what we're experiencing now wasn't expected. So we hope to get about 1,000 crores in revenue from this sector in the next financial year as well. But let's see how and where the market stabilizes and when the market stabilizes, because that is not easy for me to predict as I said right now. From the distillery sector, we hope to and expect to get a revenue of around 1,500 crores in the next financial year.
Oh, okay, sir. Thank you so much, sir.
Thank you.
That's all from my side.
Thank you.
Thank you. Our next question is from the line of Nirav Saxena from Living Root Capital. Please go ahead.
Yeah, hi, sir. So I wanted to ask, I had a similar question on the distillery segment. So, sir, going forward, how much is the margin that we expect from this segment?
See, I think right now, as we speak, margins from the Bathinda unit, we expect them to be good moving forward, and a big reason for that is the paddy straw-based boiler. It will significantly decrease our fuel costs. So we expect these margins to remain around 18%, if not more. For the West Bengal unit, due to some changes in the excise policy, there is a decrease in demand in Bengal for ENA as compared to the past. So we expect those EBITDA margins to be around 15%.
Okay. And so one more question on the distillery segment again. So have we tied up with any major brands for bottling up within a facility?
No, we haven't. We don't have any bottling tie-ups with any major brands as of now. We just supply ENA to the brands, and that includes the major brands of India, but no bottling tie-up.
So any plan of entering into the bottling for these brands?
For the Bengal unit, we are looking, and I think conversations are taking place, but none for Bathinda. In Bathinda, we're bottling under our own brand, Punjab-made liquor, and the sales are increasing monthly. So we hope to get over 1 million cases done in this year, and I think if we can build on that moving forward, then we won't need a bottling tie-up in Bathinda.
Okay. And so just one more question. So the level of operational blend the level of operational blend we see from the distillery segment going forward in the FY24 and the FY25?
I'm sorry, I couldn't understand the question.
So going forward, how much revenue can we expect from the distillery segment?
Yes, so this current financial year, we're aiming for the distillery sector to give us around 1,500 crores in revenue.
Okay. Sure. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Bala Murali Krishna Jonalgad from Oman Investment Advisors. Please go ahead.
Hi, good morning. So I have a few questions regarding the distillery segment. So earlier we used to achieve around 17,000 till 20,000 kiloliter per quarter. So now even West Bengal, I think it's not up to 100% utilization. So in this quarter, we can expect around 35,000 kiloliter on overall consolidated basis.
The Bathinda is continuing to be at 100% capacity utilization for the current quarter that we are in right now. I think for the Bengal unit, we'll be able to get 90% capacity utilization. As I mentioned in my speech, since excise policy is renewed every year in March end. So in March and April and even May, a lot of times are considered to be very lean months in terms of ENA sales, because even the bottling units are, changing as per the excise policy and all that. So for this current quarter, we are expecting around 90% and hoping to get 100% moving forward.
And just to follow up on that one only, if we have good demand in Bathinda for ENA, so if Bathinda 200 KLPD commission, then we can go for 100% ENA from the old 200 KLPD capacity, or it can be...
That is the long-term plan, but before we do that, the current plant needs a revamp. Some work needs to be done, which will take about a month. The order for that work has been placed and placed in advance, so that the towers, the distillation towers are ready in time, and we'll be taking a shutdown in I think September or October for a month to revamp the entire plant, so that the current 200 KLPD can only be used on ENA and the expansion on ethanol.
Okay, and going forward, what will be the volumes of distillery we expect maybe in Q3 or Q4 after this Bathinda also commission? So I have done some maths. Earlier we used to achieve around 100 crores from Bathinda, 200 KLPD. So if I do some math, yeah, per quarter, I think. Per quarter.
In terms of revenue?
No, in distillery only, yes. Distillery.
In terms of revenue?
Yes,
of revenue?
Revenue, yes.
Yes.
So in going forward, if I do some math with the upcoming capacities, so the revenue would be around 1,200 crores. Is it fair to assume the same figure?
Yes, 1,200 before the Suksha capacity kicks in, and post that, I think we can aim for 1,500 once the 700 capacity is installed and commissioned. See, 100 crores used to be a ballpark figure, yes, per quarter, but what we've seen in the past is that ENA prices have increased, and so have ethanol and DDGS prices. So now we achieve about 125 crores quarterly revenue from a 200 KLPD plant average.
Okay, and lastly, on further expansion plans, you have told that you have planned to expand further to 500 KLPD or some green energy projects. So any update on that? Could you please share?
Patinda, we have moved the file for a 150 KLPD expansion post 400. The environmental clearance file is ongoing, and it will only move forward once the new plant has been commissioned. And we want to properly commission the 700 KLPD and be confident in its working, and then look at expansion plans. Yes, we want to expand post the 700 KLPD, but I'll be only able to speak with full certainty once this is commissioned.
Okay, and lastly, if you can ask that whatever the power plant boiler we have commissioned, out of which how much we can save through fuel cost from Batinda?
See, out of my 400 KLPD commissioning that will be done, 60% of my fuel and my power and my steam can come from the new power plant. And this will give us significant savings. If I were to speak on per liter basis, then I'd say 2 rupees to 3 rupees a liter can be saved from this new power plant easily.
Okay, that's all. Thank you. Thanks a lot.
Thank you. Our next question is from the line of Shlok Dave from CAO Capital. Please go ahead.
Thank you very much for giving me the opportunity. Sir, just a clarification to the previous statement that you made. 60% of the power from the 11 megawatt new power plant, but is that for the expanded 400 KLPD or existing 200 KLPD?
See, that will be for the 60% of my steam and power will be from the paddy straw boiler for 400 KLPD.
For 400 KLPD, okay. Okay,
yes, so that will be for 240 of my, so I'll require about 100 tons of steam, and this should give me 60 tons. So about 240 KL would be from the new.
You will require 100 tons of steam for
steam per hour.
400 for 400 KLPD.
Yeah. Yeah.
Okay, great. And so just a clarification on some of the calculations. So what is a good assumption to take for effective number of days if you are operating at 100% utilization? This 200 KLPD or 400 KLPD, that needs to be multiplied by 365, because I know for a fact that there are routine maintenance shutdowns that every company has to take. So this
would be a good ballpark figure.
And that is every year, right? It's not like every other year you will do maintenance. You will do maintenance shutdowns every year.
Maintenance shutdowns are quarterly. Quarterly, to speak, because the plant does require cleaning once a quarter. Right. So on an average, you can do 330.
Right. So again, if I get my volume math, if I understand the things correctly, you'll have probably close to 3/4 of the year for the new 200 KLPD Batinda plant. Is that a reasonable assumption? Because
yes, I will have. By June end, we expect to have that plant commissioned, yes. But as I mentioned, we will be taking a shutdown in our current 200 KLPD plant in this year as well for a month at least to have that plant revamped. So, once you're calculating, you'll also have to include that in your calculation.
Right. No, that's okay. That's a, again, transient thing, temporary thing, that doesn't really... So what made me curious is how do you reach your 1,500 crore number? Did you mean exit run rate Q4 15 annualized? Is that what you meant by 1,500 crores coming from distillery?
1,500 crores. I'm hoping that we'll get at least a quarter of our 100 KLPD expansion in Suksha also. So that's why.
That part I understand. So what I don't understand is this 1,500 crore is an actual guidance for the entire year, or is it an exit number for Q4 next year? Exit run rate number. Like divided by 4, so you get 375. So will Q4 of next year only that part will show 375 crores, or you will actually do 1,500 crore the year? Because then my math doesn't quite add up. I don't reach 1,500 crores given the 1 month shutdown, given only 3 quarters probably of the expansion at Bathinda, and then better utilization in West Bengal, LPD expansion coming in only 1 quarter.
1,500 crores. I think we might be. I think that would be a better way to put it. Was that in quarter 4 we expect about 375 to 400 crores from the distillery segment, and I think with this 1 month shutdown we might, because it's not. I can't predict exactly what the number would be, because there will be an ethanol price increase which is expected.
I understand, sir. I understand.
ENA prices are also to increase, so we could hit the 1,500 crore figure. That's the target, depending on how much the prices of ethanol and ENA increase and price of DDGS increases. Because if you track the company, we were used to get about 100 crores from 200 KLPD in terms of revenue, and this year we did 130.
125.
So,
125 and 30.
125 to 130 for this quarter. So that all depends. Yes, I'd say to be. I think you raised a, and I think it would be safer to say 1,250 crores to 1,500. Anything in that.
Yeah, better have toned down expectations for the market, because 1,500 near, so then there is always a. Sir, I would like to understand your edible oil business slightly in a better way. This is something that I don't understand about the company. So as you said, the market is in free fall as of now, right? So when your margins get compressed, are we talking about a completely commoditized product where bulk of the compression in margin actually is because of inventory losses, and the spreads they're basically maintained, and once the fall in the underlying commodity stops, the margins immediately rebound? Or is it something else, which is that the spread itself is getting compressed? Because I don't have enough data to actually understand what exactly is the ramification of this fall in the underlying commodity on your revenues and on your margins. So can you explain that bit in more clarity? What generally happens? How does this commodity behave?
Yes, there are two types of edible oil businesses that we're involved in. One, which is our specialty and the sort of business that we want to be involved in moving forward, is the indigenous edible oil. So that is your, cotton seed, mustard, rice bran. That was always our company's specialty. And once the global edible oil prices start to fall, these oils don't give us as much losses in terms of inventory losses, because first the holding period is much shorter when compared to imported oils, and secondly we have seen that the prices of indigenous oils tend to be more stable as opposed to imported oil. There has been the imported oil market has been extremely volatile for the past 9 months, and a lot of times a lot of these contracts are forward contracts, forward shipments that we book in advance, and that is your CPO, crude palm oil, and your soya bean oil. So once these prices start to fall, then there's an inventory loss that needs to be booked. The spread doesn't change. We still work on some margin, as opposed to, but the problem is then we have to consider the current buying price of the raw material.
Can you provide some understanding as to what this spread is, this constant spread? So there are two components, right? One is the inventory expansion and compression. The spread, the expansion and compression in the spread because of inventory losses and gains. The second one is that fixed amount, right? That fixed spread which doesn't change that much.
That too depends on what edible oil am I using, because see, we have a fully integrated unit that includes an oil mill, solvent, refinery, hard fat manufacturing unit, and also a rice mill. So when I'm processing, for example, a mustard crop, then my entire plant is getting utilized. my oil mill is crushing the mustard seed, my solvent is extracting the oil from the cake, and further my refinery is being used for that mustard oil as well. So that is a crop that is a oil that has value addition on each and every step. For example, even rice bran, we consider it to be a good alternate because my solvent is being used for the rice bran, and the cake usually sells at a very good price. So these tend to have a higher margin as opposed to imported oil, where I'm importing the oil, just refining it and selling.
Ladies and gentlemen, please stay connected. The line for the management is dropped. We'll reconnect them quickly. Ladies and gentlemen, the line for the management has reconnected, so you can go ahead.
Yes, sorry. So as I was saying, there is no set formula to give you what is commodity-wise my margin, but as opposed to the same quarter of last year where we did 4.56 this quarter and 2.97 last quarter. So once we have more indigenous oils to process, we expect better margins. And overall, I don't expect the margins to, I think what we did this quarter is अच्छे margins तो मुश्किल ही है sector चलाने.
In any one year when the prices are steady, everything is like normal, right? ये साल बहुत ज़्यादा disruption रहा है, but in any one particular year when everything is stable and steady, how much ROE can this business generate?
This business, we expect this business to give us around 3.5 to 4% of EBITDA margin in a stable year, and
at what turnover?
At a turnover, see, that is also another very hard question to answer because the prices have fallen by about 40-45% now. We expect, I'd say, to be safe, 1,000 crores of turnover.
Okay, 3.5 to 500. Okay. One final question, which is coming back to the distillery business. What kind of price escalations are you expecting? What is the industry expecting? Because the last round which happened, everyone was left, like it was good but not that great. Everyone wanted a bit more. So what are the what is your sense?
We as a company are expecting that the maize prices of ethanol will be significantly increased because the government needs to move in that direction now. They can't rely on
which prices?
The price for ethanol made from maize, corn.
Maize prices, okay.
Yes, because the government can't simply rely on FCI rice as being the raw material for the grain-based ethanol industry. See, what we've seen this year, and there was a conference held in New Delhi, in which all of this was discussed. What we've seen this year that, for the government to promote an Atmanirbhar Bharat and support its agriculture sector, they need to ensure that a farmer is not selling his crop below MSP or below a price where the farmer has to book a loss. Last year, we saw this with mustard and maize and every crop that the farmers grew. They made that crop gave them a very good return. And that will only help the agriculture sector, and that will only help India in crop diversification, which is which is a very urgent need as of now. What we've seen this year is that maize is selling below MSP, and even mustard is selling below MSP. And this is in the government's notice, and they don't want this to happen. See, for a farmer who grew maize this year and they didn't get the remuneration for it, they'll go back to paddy next year, and they'll expect the government to buy it at MSP, and the government does not want that burden on themselves.
Right.
So what as per our reading of the market and the policy, we expect that the government will increase the maize price of ethanol, so that the maize that is currently surplus in the market will be bought by distilleries, converted into ethanol, and sold to the OMCs. And this is the most
maize.
I'm sorry.
You guys can use maize, right?
Yes, we can use maize, and we prefer to use maize. It is the most sustainable method for the industry, as maize is not as water guzzling as paddy. The grain-based. If you look at the grain-based ethanol market globally, it's all dependent on maize. India is an outlier, which makes it from rice. So we expect those prices to increase significantly. Let's see what the government does, but I think we should expect those. For the prices from surplus price, I think we don't expect much increase from them.
Got it. Has West Bengal finally stabilized after the excise policy changes?
Now. Yes, Bengal is stabilized. The production, the factory is working with very good parameters. It's just that there were some policy changes in the alcohol market, which has led to a significant decrease in sale of alcohol in Bengal. So that had backed up a little bit, but we hope that will stabilize in the future too.
And Q1 will be back to trend levels for West Bengal, trend growth levels?
Q1, I think we should...
For the industry. You guys, I understand what you guys are going through, but for the industry, liquor sales and alcohol sales in West Bengal, will they revert to...
It will take some time to pick up, because the government has done two things. One, they have increased the prices of country liquor, which has led to a decrease in sales. And secondly, what they have done is for the distillery industry, which is a bit of a negative, is what they've done is they have imposed an export fee for us to export ENA out of the state, but they've waived the import fee.
Okay.
And historically speaking, Bengal used to be a state which used to have a very high import fee. So they've done the opposite now. These are policy changes. They keep changing. I think at one point of time, having a unit in Bengal was more profitable than having a unit in Punjab, and now this has changed, and it could change in the future also. So there are policy changes that keep changing. So all we can do is give our representation and try to nudge the government in the right direction.
Understood, sir. Thank you very much for giving me the opportunity and answering all the questions in great detail. All the best, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Aditya Surana from Niveshaay. Please go ahead.
Hello, sir. Good morning. So can you please tell me the order book currently, and how much time it will take to complete the order book?
Order book of what?
Of ethanol.
Order book of ethanol, I think we have till November end to complete the contract. And I think for the Barinda unit, it's at around 4.5 crores for the year till 5 crore. And for the Bengal, it's around, I think, 3.25 crores. And we expect to commission to complete the entire quantity. And as we speak, we might even put more quantity. So the order book can increase, because there has been a new cycle that was just introduced this year. I have to still look at it and put in more quantity.
Okay. So can you explain me the cost structure of ethanol in liter terms? Like raw material cost is near to about 42 and fuel cost is 68 rupees. Can you explain me the whole cost structure?
See, for a ton price, we expect the industry standard is 450 liters of ethanol. That could change depending on how efficiently you're working your plant or how efficiently you're not working your plant. And then about depending on your raw material, about 18% recovery is DDGS, which is currently selling at 27 rupees a kg, I would say. And then there are your fuel costs, which are about 12 rupees a liter. And then there are other costs, your salary, maintenance, finance cost. So I think you can do the calculation from there.
Okay. So can you show me the EBITDA margin going forward?
I mentioned this earlier. I think for the Batinda unit, we should expect around 16 to 18% in EBITDA. these are all, I think, quite conservative numbers that I'm giving, and for the Kharagpur, around 15%.
Okay. So how much revenue can be generated from a 100 KLPD plant in a year?
100 KLPD plant should give you around, I'd say, 270 crores of revenue.
Can you explain me the calculation like 100 KLPD plant, it would be converted into liters by multiplying by 1000 and it would be sold at 60 rupees near about. So can you explain me the calculation?
Yeah, a 100 KLPD plant should give you about 3.3 crores in spirit. If you multiply that by 58, that is 191 or 192 crores, and the rest is in DDGS sales. DDGS, CO2, and then, there are other sales, Bardana sales also that you can include. So all those are included.
Okay, thank you,
Thank you.
This was it. Thank you.
Thank you. Our next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers, and thank you for taking my question. Sir, on the edible oil side, you are saying that things are looking tough. So do you expect current margins of 3.5% to stay, or do you think it can go even lower from here?
The margins, the processing margins, we expect them to be stable. We don't expect much of a decrease in them. But the only thing is, the inventory, the loss on the inventory that we're a little worried about as we speak. So, we don't expect the market to remain the way it is right now, but let's see what happens.
But like for our segment-wise reporting, do we carry high-cost inventory which can give us losses, or how should we look from BCL?
There are some forward contracts that we have to do on imported oils. So that is usually, as I was explaining, indigenous oil is not much of a problem because they're not as volatile as imported oils, firstly. And secondly, the holding period for them is much shorter. We can buy mustard seed from the market, process it, and sell it. Whereas, imported oil, the holding period is much longer. And, there are future contracts also that we need to fulfill. So that is a bit of a worry.
Got it, sir. And sir, on the distillery side, you are saying 1,500 crore revenue for this year. So like over 350 per quarter, and currently we are at a 200, around 200.
No, so I have been corrected. Say around, I'll make the change of about 1,200 to, around 1,200. It can go up above that also, depending on the escalation in ethanol and ENA prices.
So basically, like the jump will come in from second half, or how should we expect the revenue jump from this segment?
The revenue jump, in quarter two, I think there should be another expansion of Bathinda that will add to the revenue, and we expect the Swaksha unit to also operate at 100% capacity utilization, which in the past it hasn't, so that will add to the revenue as well. So I think 1,200 is a very conservative figure in terms of revenue.
So basically, Q1 will improve marginally, and then Q2, Q3 will.
Yes, you will start to see much of the impact.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. Our next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello, sir. Good morning. You mentioned things have been stabilizing in West Bengal after the policy changes, and then you mentioned that Swaksha distillery will be good moving forward. So by when do you expect this?
No, I think quarter one, the results will be better than the previous, and then moving forward, it will be better.
Okay. And you've given your views on like individual segment-wise margins, but then so on a console level, like how do you see this? So I think we're currently at around 7%. So flat, it's been flat year on year. But you see improvement by the year end?
consolidated margin?
Yes, yes.
Yes, I think, as the revenue share from our distillery sector increases, so will our margins, consolidated margins.
Okay, but like these are sustainable numbers otherwise?
See, if I were to look at my EBITDA margin for last financial year, it was at 6.61% as opposed to 7.22 this year. And, with an increase in distillery revenues, I think this can go up to 8.5%.
Right, okay. All right. Thank you. All the best.
Thank you. Our next question is from the line of Balamurli Krishna Junalgat from Oman Investment Advisors. Please go ahead.
Thanks for the opportunity again. So regarding this oil segment, so do you expect any inventory losses like in Q3, Q2 we have posted inventory losses? Or do you accept the same thing in this quarter?
I can't comment on that right now. I think I've already spoken enough about the market. I can't predict where this market will be 1 month or 15 days down the line, to be honest. As of now, it's very volatile. So I really can't make a comment on this right now.
Okay, thank you.
Thank you. Our next question is from the line of Manan Shah from Moneybee Investment Advisor. Please go ahead.
Yeah, hi. Congratulations on a good set of numbers and a wonderful gesture from the promoters on foregoing their share of the dividends. My question was on the Swaksha. So, wanted to what feedstock are we using as fuel for the Swaksha distillery?
See, now for ENA, most of my feedstock is maize. So ENA primarily, I would say maize. For ethanol, it's FCI rice.
Okay. So my understanding is that if we use maize, the yield that we get as against rice is lower.
See, the alcohol yield for maize is lower as opposed to rice.
Okay.
But the DDGS yield is higher in maize as opposed to rice. Okay. So our calculations are based on, what the DDGS prices are and what ENA prices are and what maize and rice prices are. That's when we decide, after looking at everything, that's when we decide what raw material to use. So maize currently is cheaper in Bengal as Bihar is surplus in maize this year. So we decided to use maize as our feed for the ENA.
So on an absolute basis, the revenue that we will generate by using maize as against rice, will there be any significant difference, or we don't expect any significant difference, either on the upside or on the downside?
No, maize as of now is more profitable than using rice, damaged rice from the market. So looking at that, we've shifted to maize, and I've given. I'd expect the EBITDA margins to be around 15%, and that being that is looking at the maize prices currently.
Okay, understood. And what are we using for power and fuel as a feedstock over there?
Mostly husk, some of coal.
Okay. So if at all coal prices tend downwards, then we can expect further improvement over there?
Yes, the coal prices have been softening. And, we are looking at future contracts for coal. So, yes, I think that should help a little.
And is rice straw also available over there? And is it possible that we can...
Rice straw won't be possible in Bengal. Firstly, because, in Bengal, people use this rice straw for other uses. Their cattle, it's used as cattle feed also. Or it's used as many other... There's not a problem of rice straw being burnt by the farmers. It's being used by them. And secondly, to install a rice straw-based power plant is a huge, colossal task. It requires a lot of space. And, I reiterate this again. We're the only alcohol company in the country that will now be using rice straw as a fuel. And it was a colossal task to, collect this rice straw, store this rice straw. I'll give you an example. For next year, I need 120,000 tons of rice straw for the entire year as my fuel. And I have a 15-day period to collect this during the harvest period. Either the farmer will burn this or either I'll collect it from him. And I need about 120 acres of land to store this for the entire year. So this requires a lot of preparation beforehand to plan and collect this rice straw and store it. But this is a strategy that will pay us dividends moving forward because fuel has been a problem in the past, and we don't expect this to go away very soon. And we have a very good alternate fuel now as a source. And even the capex on a power plant that will run on paddy straw is almost double as opposed to a coal-fired or a husk-fired power plant. So a lot of hard work has been put into this. And in Bengal, unfortunately, it's not possible because there's not a problem of surplus rice straw.
Understood. Fair point. Thank you. I'll get back in the queue.
Thank you.
Thank you. Our next question is from the line of Narendra from Robo Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah, so you talked about the edible oil in two capacities, that is indigenous and imported. So is there a definitive split between the two right now that you are seeing?
See, it changes, it varies depending on the demand. So right now, as we speak, I think most of the plant is running on imported oil. But this changes, if mustard prices are to increase and farmers start selling the mustard again, then it'll start running on mustard again. The problem is that the prices of mustard have fallen down so much that the farmer is not interested in selling. So there's not much availability of the raw material.
Okay, so there's not much that we can do about it, right?
Yes.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Siddharth Malhotra, who is an individual investor. Please go ahead.
Yeah, hi. Most of almost all my questions are answered, but I would like to use this opportunity to just make a housekeeping point here. The moderator just mentioned requesting participants to ask maybe 1 or maximum 2 questions. But about 20 minutes back, there was a particular participant who took away 25 minutes of the Concall. That is downright ridiculous because this Concall is not a tutorial. It's supposed to be answering questions from investors. So that's a point for the moderator to keep in mind. That's my only point. Thanks very much. Otherwise, most questions are answered.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Neeraj Jain, who is an individual investor. Please go ahead.
Yeah, thanks for the opportunity. So my question is regarding the commissioning of the Bhatinda plant. So if I remember correctly, when we had the last investor call sometime in February, the management had mentioned that we hope to commission it by end of that quarter. So I would assume they meant end of March. Now we are hoping for the commissioning to happen by June end. So any specific issue we are facing with the commissioning like we faced with Swaksha, or can you please help, sir?
No. There's no particular issue like Swaksha. Swaksha was I think one-off issue where a column that was delivered was faulty and it didn't perform as per its requirement. In Bhatinda, I think a big problem that is that I think everyone is facing, that a lot of these machinery suppliers are quite booked, and they've been delaying a lot of things from there, and a lot of bought-out items do get delayed sometimes. And keeping that in mind, that's why we decided to commission the power plant before the distillery. But this time we hope and we expect that the deadline won't change.
Okay. And my last question related to Swaksha is that you mentioned for this quarter the capacity utilization would be around 90%. So can we expect a revenue of around 110 crore from Swaksha for this quarter, or is that an overestimation? Thank you.
Ladies and gentlemen, the line for the management has dropped. Mr. Jain, please stay in the queue. I will reconnect the management quickly. Thank you. The line for the management is reconnected. Mr. Jain, you can go ahead with the question.
Yes, sorry. You were asking about Swaksha?
Yes. So as you had mentioned that for this quarter, the capacity utilization would be around 90%. So I was just asking about the revenue estimate for this quarter for Swaksha. Will it be like around 110? Because you mentioned that 200 KLPD plant, generally the revenue would be around 125 crore per quarter. So is 110 a fair estimate?
Yeah, I'd say around 100 to 110. You can probably consider that much for the quarter.
Okay. Okay. And can I ask one more question, please? That would be my last question.
Mm-hmm.
Yeah. So for your allotment, the placement that you had done, so I understand that as of now, 25% of the amount has been paid in by all the investors. So any timeline when the rest of the 75% would be coming in the company? Because I understand you would be using it to reduce your working capital, right?
Yes.
The loan that you have for working capital.
No set timeline as of now. I think we have 18 months from the receipt of 25%. So no specific timeline.
Okay. Thanks a lot.
Thank you.
Thank you. That was the last question of our question and answer session. I would now hand the conference over to the management for closing comments.
Yes, I would like to thank everyone for tuning in on the call and asking very insightful questions. And we hope to deliver on everyone's expectations moving forward. And thanks again.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your line.